Okay, hi guys. Today we are back with the next part of your advanced NPV. Okay, inflation and also working capital. So as I promised you previously, what we're going to do today is we're going to move into the next area of advanced NPV, which is your inflation and working capital. So of course, I always have one question to ask you at at the beginning of every topic. What is inflation to you guys? How would inflation affect the company? How would inflation affect the cash flows? How would inflation be accounted in your investment appraisal? So as you have already know, okay, as you already know, inflation is actually a general increase in the price level. So maybe you guys just want to add this here. It's a general increase price level. Okay. So when I say it's a general increase in the price level means that over time there will be an increase in the prices of goods and services. So inflation actually calculates the percentage of this increase in prices, okay, in form as I mentioned, in the form of percentage. So you would see from your examiner's question that he will say the inflation for selling price, so inflation for variable cost is 4% or 5%. So you must remember that this inflation is normally given in percentages. Okay, so how would it affect your NPV calculation? So, as you know, previously when you studied the basic NPV, you did not include the impacts of inflation. The reason why is because when you learn the basic NPV, you are just studying the basics and you do not include inflation because it's not part of your requirement. However, as a part of your syllabus requirement in the FM paper, you are required to know how to calculate the inflation level. Now, the percentages will always be given to you, right? What you should do is that you should be able to calculate or to incorporate inflation into your calculation. So how do you do that? What is the step or approach that you take to incorporate these values into your calculation? Number one, you must know what are the inflation rates given, because the logic is, guys, when we are doing the FM paper, we are trying to generalize it. We are trying to make it more practical, more applicable, something that is more relevant to you guys. Okay, when I say relevant to you, it means that it is more practical. Okay, it's more applicable in your day-to-day lifestyle. So what you will do is you will incorporate the inflation values, okay, into your investment appraisal. Reason being because in over time there will definitely be an increase in the value of money. All right, hence you need to include these price increases in your NPV calculation. So you must be careful, because when it comes to inflation, guys, I'm going to switch to a new page first, then I'll come back here. Okay, this was the question. Okay, when it comes to inflation, you have to be careful in your question, because the examiner might give you specific inflation, specific inflation rates, or he might give you general inflation rates. Okay, what does it mean by specific inflation rate and general inflation rate? General inflation rate means there is one rate that can be used and applied to all areas of your investment appraisal. Okay, one rate used for all revenue and cost components, whilst when he says specific inflation rate, it means each cost and revenue item has its own inflation rate. Okay, so each revenue or cost item has their own inflation rate. So I'm just going to give you an example. If the examiner say sales price or variable cost, fixed cost, and WC, working capital, maybe I will write it as working capital for now since you guys may not be aware yet. Working, okay. If he said the selling price inflation is 5%, the variable cost inflation is 4%, fixed cost is 3.5%, and your working capital is 4.5%. Okay, I bet you can see that this means this is a specific inflation rate, whilst if the examiner gives you, or if he says general inflation rate is 5%, and then he will continue to say all costs and revenue will increase in line with the general inflation rate. Okay, if examiner says this, it means that all your sales, variable cost, fixed cost, working capital, each and every one of it will increase by the same percentage of 5%. All right. So please be careful when you are doing the inflation. You must check whether the examiner gives you a specific inflation rate. So I might just write it down here. And general inflation rate, right? So please be aware of this. Make sure you understand the concept of specific and general inflation rate. Now, guys, back to the slides. Okay. So there are two terms that you need to understand besides the general and the specific inflation rate. Actually, the general and specific, you don't need to know it. You need to know how to apply it in the exam. All right. But for these two terms, real and nominal, it's something that you have to know. The reason why I say it's something that you have to know is because the examiner will use these terms when he asks questions from you guys. Okay. So when the examiner wants to indicate that the cash flow does not have inflation, he will call it a real term. Okay, I repeat, when the examiner wants to indicate that there is no inflation, he will use the term real term. And when the examiner wants to indicate that there is inflation, he calls it the nominal or the money cash flows. All right. What I need you to understand is that he can use it interchangeably. He can use nominal or money. It's up to him how he wants to use the information that he has given to you. So if he says nominal or money, it means that that item includes inflation. Okay, guys, now you must be careful because there must be consistency in your answer. Okay, if your examiner requires you to inflate all your cash flows, you would also need to ensure that the discount factor that you use is an inflated discount factor. So please continue to to write your notes here. Number 3, if cash flows are inflated, the discount factor will have to be inflated. Example, if you use nominal cash flow, your discount factor has to be nominal discount factor as well. Please ensure that you know that. Why? Because sometimes the examiner will give you or will require you to calculate nominal cash flow, but the information that the examiner gives you is real discount factor. So what you need to do in that case is you need to calculate the inflated discount factor. How do you calculate the inflated discount factor? You will use the Fisher formula. Okay, guys, I just want to remind you that the Fisher formula is a method used to estimate the nominal discount factor. So hold on, let me write it first. The nominal discount factor. Besides that, when you use the Fisher formula, point number 2 that you really need to note and pay attention is that you can only use general inflation rate. Please do not use any other inflation rate as you like, okay? Because if you use an inflation rate that is wrong, your discount factor, the nominal discount factor will be wrong. So please be aware and please be careful of that. When you use the Fisher formula, 1 plus R into 1 plus H equals to 1 plus I, this formula, R is the real discount factor, right? Real discount factor. H is the general inflation rate. Please remember, I repeat, this is only for the general inflation rate. And I is the nominal discount factor that you will calculate. Guys, sometimes I have a problem. Okay, I'm just going to give you a very short, simple example. Assuming the real discount factor is 7%, the general inflation rate is 5%. Please calculate for me what is the money discount factor. So how you do it is you use the Fisher formula, 1 plus R 0.07 into 1 plus general inflation rate should give you, okay, hold on. 1.07. Okay, now I'm doing the calculation with you guys. 1.07 multiply 1.05. Okay, it should give you 1.1235. 1.1235. Okay, so students get confused. Miss, how does this relate to the money discount factor? Because 1.1235 is actually 1 plus I equals to 1.1235. Okay, I equals to 12.35%. All right, so my money discount factor is 12.35%. Now guys, just a reminder, examiner allows you to round down So you can use the equivalent of 12%. Okay. So this is the concept of inflation. It's not difficult. It's not complicated. It's actually very simple and straightforward. I think the complication arises in inflation for students normally when they give you information that is non-constant. Because let's say the selling price is constant, every year is $25, it's easy for you to calculate the inflation. But assuming he gives you the information in your NPV to calculate, let's say selling price in year 1, year 2, year 3, year 4, but in current price terms, that is where students have a problem. But don't worry, okay? I will teach you about this later. I do not want to add too many complications here. What is important here is that you understand the basic, and when you take the basic, you can incorporate a more difficult area. Right now. So the final part of our advanced investment appraisal is working capital. So guys, you have already studied working capital in the past, right? What is working capital? How do you calculate working capital? So working capital is actually the amount of money that you invest in your organization to ensure that it is operational on a daily basis, right? That means to run your day-to-day operations. So working capital is actually a short-term investment. If you realize your initial investment is your long-term investment, while your working capital is actually the short-term investment. So what it means is that when you say short-term investment, that means your company will invest at the beginning of the year. So you invest at the beginning of the year, you will invest this amount of working capital. After this, following that, on a yearly basis, you need to top up this investment. So let's say today you invest $500. Next year, you need to invest $550. So what happens here is because you already invest 500, in the next year, the incremental amount that you need to invest is $50. And the relevant cash flow for the purpose of your net present value is only $50 cash outflow in year 2. All right. So please be careful because examiner is testing your knowledge on relevant cash flow. I'm going to repeat that. Let's say in year 0, your working capital that you invested was 500. In year 1, you required $550, and year 2, you required $600. Year 3 is the end of the project. So for the purpose of investment appraisal, 500 is relevant because it's an initial investment. You invested the whole amount just for the project. It's a cash outflow specific cash flow. So it's a relevant cost. Now, from year 0 to year 1, the company has already invested $500. So the additional that he has to invest is only $50. And similarly, in year 2, you only need to invest an additional $50 from the prior year. Okay, so I hope this is clear. You need to know how to understand this because you must remember the concept of relevant cash flows. Only your incremental working capital is relevant for the purpose of your net present value. Now, in working capital, you have one more assumption that you make, which states that at the end of the period, you will be able to recoup all the investments that you have made in working capital in the form of profit. So, give you an example. Let's say you invested in working capital. You bought inventories worth of $500. And then the next year you had to buy additional inventory. So you use additional $50. And then in year two, another additional $50. So you have used up a total of $600 to purchase your inventories. So what happens is, in year three, at the end of the project, you will not incur any additional amount for working capital, but you will assume that whatever amount that you have invested, example, the $600 just now, you will be able to recoup it in the form of profits in year three. Okay, so please remember that this is a general assumption for working capital. So maybe you guys want to write this here. So general assumption. Okay. All working capital will be recouped in the end of the project in the form of profits. Okay. Now, so whenever there is an increase in working capital, it means that it is an additional investment. So increase means an additional investment. Hence, it will be a negative value. If there is a decrease in working capital, it means that it is a reduction in your working capital. You have cash saved, so it would be a positive value, right? So the three concepts that you need to understand in relation to working capital, okay, is that whenever he said there is an initial investment or an additional investment in working capital, these are relevant costs. Why? Because this is an additional investment amount specifically incurred due to the due to your company taking on the project. Number two, incremental working capital. So incremental working capital means there has been an additional investment in working capital. So this additional amount is a relevant cost because it is specific to your decision again. And finally, in the end of the period, you would have a recovery amount, or you will be able to recoup this amount. So this is a positive cash flow. This will be in the final year, okay? And there is only one way or one reason why there isn't an amount that you recoup. So I repeat, initial amount is incurred in year zero. The incremental working capital is incurred from year one to the final year of the project, not the final year, 1 year before the final year, okay, year one onwards. And the recovery amount would be in the final year. Okay, so these are concepts that you need to understand if you want to get knowledge about this. So year zero, this is your investment amount. This year one, year two, this is your incremental. And year three is the recoup. Investment. All right, so this is to understand the 1, 2, 3 points here. Now, please be aware that your examiner might trick you, right? I know that I said examiner will ask you to calculate the working capital, right? And there will be incremental working capital and recoup. But I just want to remind you that there will be a circumstance where the examiner has no recoup in his answer. When he mentioned that asset will be replaced, he did not recoup the working capital because the examiner's assumption is the project will still continue even though the asset is sold. That means the project will continue. The next one, the examiner will not have any elements of incremental working capital. Why? Because during the life of the project, he did not incur any additional costs besides the initial cost that he has incurred. So you can see how examiner manipulate with you, okay? But don't worry, when we do more questions, you will see how the examiner's method differs in every question and how you treat this element. Actually, guys, once you follow the concept of doing it, it becomes very easy for you to tackle the question like this. Okay, now let's go back to the lecture example that I've given to you, the additional lecture example that was given. In here, I would like to, so previously I've done the first part, the taxation, okay, tax saving on capital allowance. Now I'm going to do the working capital. Okay, I don't think there's an inflation example yet, not yet, okay, but let's do the working capital information. Let's deal with it. Now, Kwitongo PLC expects the following working capital requirement during each of the 4 years of the investment program. So, in year 1, he wants an investment of 250. In year 2, he wants an investment of 300. Year 3, 375, and year 4, 400. All right. Now, Kwitongo PLC has an accounting year end of 31st December. Expenditure on the investment program will take place in January. Okay, so guys, I want you to remember when the examiner say he requires the investment in year 1, that means he requires the working capital in year 1. If you want to use the working capital in year 1, you need to invest it at the beginning of year 1. But for the purpose of presentation in our NPV, we don't have a presentation for beginning of year 1. However, we have the presentation for end of the year. Hence, beginning of year 1 equals to end of year 0. So, when you do your working capital requirement, please remember to use this following format. Year 0, year 1, year 2, year 3, and year 4. Guys, if he wants to use it in year 1, he needs to invest in year 0. If he wants to use it in year 2, he needs to invest in year 1. Right? And so on. 1, 2, 3, 400. Okay. Now, guys, so here, incremental is 250. 50, 75, 25. Now, remember I told you, in the final year, which is year 4, what the examiner says is that you will recoup all the amount that you have spent on working capital in the form of profits, means you will have a positive $400. Guys, always remember, for the final year, it's always a positive unless it's asset replacement cycle. That's number 1. How do I get this total amount of 400? You just copy and paste the working capital requirement at the end of year 3. To double check your answer, you must add all these values and it must be equals to 0. If it's not equal to 0, that means there is something wrong in your calculation. So guys, I repeat, why I put this in year 0, the reason I put it in year 0 is because this amount will be required in year 1. When you're required to use inventory in year 1, you cannot invest in year 1. You must invest before year 1. Then only you can use it in year 1. Let's say, guys, you want to use a certain amount of money in March. Can you only start to save money in March? No, right? Doesn't make sense. So the same concept. When you want to use the inventory, you must buy the inventory earlier than the time that you want to use it. So if you want to use it in year 1, you must invest it in the beginning of year 1. And as I told you, your net present value format are all end of the year cash flows. So if you invest it at the beginning in year 1, you have to present it at the end of year 0. So if you invest at the beginning of year 1, you must present it at the end of year 0. Please, please, please be careful of that. All right. And then every year you increase your investment, and over time you will notice that the amount that is required, the total amount that you have invested, is how much you have recouped in the final year. So please write somewhere around here. The only scenario the only time when there is no recoup is when the only time when there is no recoup is when the examiner states asset is replaced. Okay, clear? So this is the concept that you need to hold on to in terms of working capital and inflation. Inflation, I've not shown you an example yet. I will show it to you when we do the tutorial using the past year questions. It's actually quite simple and straightforward. I'm going to do about 2 questions, okay, for investment appraisal. But before we go to the 2 questions, let's complete the entire question because we have sufficient information to complete this question already. Okay, so I'm going to teach you how to do it step by step. Okay, this question has been extracted from the BPP revision kit. Okay, sorry, the PPP course notes. Just write it down here, extracted from BPP course notes. All right, so guys, now look at the examiner's requirement. He asks you to calculate the NPV of the project. So to calculate the NPV of the project, now, what information has he given you? Okay. Kwitongo PLC is considering a major investment project which involved the creation of a chain of retail outlets throughout the UK. The following schedule of expected cash flow have been prepared for analysis. So you have time 0 to time 4. You have the information on investment in land and buildings, fittings and equipment. He has given you the gross revenue, direct costs, marketing costs, and office overheads. Okay, let's see which of these costs are relevant and not. Now, additional information, okay. 40% of the office overhead is an allocation of the head office operating costs. So if you remember, an allocated cost is a non-relevant cost. Non-relevant cost, okay? So you have to exclude it from the calculation. You only include 60% of $100, which is $60. So all this cannot be 100 anymore. It has to be $60. B, the cost of land and buildings includes 120,000, which has already been spent on surveyors and advisors fee. So this is a historical cost, so it is not relevant as well. So please don't forget to remove 120 from the answer here. 3130. Quitongo PLC expects to sell the chain at the end of year 4 for 4.5 million after tax. Okay, so it's a no issue. Cost of capital 7%. So this is my discount factor. We have read this together previously. Let's do the question together now. Okay, year. Remember, when your tax is paid in arrears, always remember to add one more column. Year 5. Sales, okay. Direct cost, marketing, and office overheads. Those are my cost elements. So direct cost, marketing cost, office overheads. All right. After that, I have operating cash flow. And then I have tax at 30%. Initial investment, scrap value, tax saving on capital allowance and working capital. Okay. Then you get net cash flow, PV and PV. Sorry, I forgot discount factor. Discount factor, PV and PV. PV and PV. Now, so what is the gross revenue? So you guys, you can scroll up and see. Okay, I'm going to use my version here. I don't think you can see my version. I'm not sharing my screen with you. So my gross revenue is 1,1750. So here 1,1750, 2,500 and 3,200. Okay. The next one, direct cost, 800, 1100, 800, 1100, 1,500 and 1,600. Marketing costs. Okay, let's talk about marketing costs for a while. Do you think marketing cost is relevant or not? Okay, if it is relevant, why? If it is not relevant, why? So maybe I'm going to give you about 20 seconds to think about it and answer in your mind, because you obviously cannot answer me, right? So think about it and let me know whether your marketing cost is relevant or not, and the reason why you deem it as relevant. Okay, so marketing cost is relevant. Why is marketing cost relevant? Because this is an incremental cost that the company incur just for the sake or for the purpose of this particular project. So this amount is relevant. What is the value that is relevant? 170 to 150. Oops, 170, 250, 200 and 200. All right. And then your overheads, which is only 60%, 60, 60, 60, and 60. Okay. So let's take some time to calculate the operating cash flow. So 200, 130. So this should be negative 30. 340 740 1340. Okay, correct. 340 is correct. 2500 minus 1500 minus 200 minus 60. Okay, 740 is correct. 3200 minus 1600 minus 200 minus 60. Okay, 1340. Okay, now please remember that your tax is paid in arrears here. That means year one column for tax is always going to be 0. So guys, remember what I told you. The moment you have tax paid in arrears, put this 0 first because you don't want to make that mistake. Now, the next confusion is that your cash flow, your operating cash flow in year one is negative 30. Remember what I told you about negative cash flow? When there is a negative operating cash flow, there will be a tax refund. So here will be 9. And you can continue to fill up the others. This is 340 multiply 0 0.3. It's 102. 740 multiply 0 0.3 is 222. 222. Sorry. 2. And finally 1340 multiply by 30. 1340 multiply by 0 0.3 is 402. So you guys got that? Now fill in the easy ones. Initial investment, remember 3250 minus 120 plus what is the cost of your furniture and fittings? 750. You can put all together, you can separate it out, that's completely up to you. So it should be 3880 in year one. Okay, I think I need to raise this, all right? So plus 750 is 3880. Your scrap value, okay, remember, was 4.5 million. So guys, this is a common mistake for students. You have the tendency to accidentally put it in year 5 because you think that that's the final year. Remember, what sits in year 5 is only the tax item. Nothing else sits in year 5 besides the tax items. Okay, if anything else that you find sitting in year 5, that means there's something wrong with what you're doing. Okay, so do not put anything else in year 5 other than your tax items. So here it will be 4,500. Okay, my alignment may run a little. So this is our working one that we did the other day. All right, so our working one that we did the other day. So tax saving on capital allowance. Okay, I'm just going to write it down here. Working one. You guys can just copy mine. I'm doing it again. Tax saving on capital allowance. Okay, just to show in case you are still a little bit lost. Cash flow, tax at 30% and timing. Okay, so year 0, my cash flow is 750. Year 1, I get a 25% reducing balance basis. All right, so 25% of 750 multiply, 25% multiply 750. 188. Okay, 750 minus 188, you should get 374, sorry, 562. Okay, now 562 multiply 25% is 141. So number 2, 141. Now 562 minus 141, 421. And then 421 multiply 25% is 105. 421 minus 105 is 316. So this is year 3, 316. Okay, guys, you are selling the machine in year 4, 116. Okay, this is my scrap value. This is my time 4, which is also my balancing allowance, right? Now, 30% of 188, okay, 30% of 188 should be 56. 30% of 141 should be 42. 30% of this is 32. And finally, 30% of 166 is 35. So guys, just a very quick reminder again. For the final year, year 4, it must always be on your balancing allowance. Please do not confuse yourself and use the scrap value. That is not the way you do it, right? It's always on the final column on the balancing allowance, because the balancing allowance is actually the amount of tax under claim. Okay, I hope you remember this. It will be the same for all the questions, all right? There wouldn't be any difference from this. Okay, so I'm just going to copy and paste it. 56, 42, 32. So year 0, nothing. Oops, I forgot to fill up the timing. Year 2, year 3, year 4, and year 5. So 56, 42, 56, 42, 32, and 35. Okay, working capital. Working 2, let's just take from what we just did just now. 250, 50, 75, 25. So working capital starts in year 0, 250. 250, 50, 75, 25, and 400. So you guys, you can calculate for me the net cash flow here. So net cash flow, you should get 4130 negative, negative 80, 330, 655, 6050. Okay, something is not right here. 1, 2, 3, 4. 4130, 80, 330, 655. Year 2, year 3, year 4. Let me see. Year 0. Oh, it's in the wrong column. Sorry. Sorry guys, this is in the wrong column. I told you I might have a little bit of an alignment problem here. So 250, 50, 75, 25, and 400. Sorry, my bad. Okay, so here 4130, negative 80. This was 330 if I'm not wrong. Okay, 655, 6050. And finally, in the final column, you will have 367. Okay, let's proceed, guys. Don't forget the negative sign. Okay, so we shall proceed to calculate our present value. Okay, zero. Okay, please fill in this. This is 7%. It looks like 4 for some reason. Okay, 7%, 1.000, 0.935. Okay, 0.935, 0.873, 0.816, 0.763, and finally you have 0.713. Okay, you can copy paste it from the formula sheet that is given in your examination. But remember, I have taught you an easier manner, okay, on how you calculate this discount factor. Now, your present value of cash flows here, 4130, 75, 288. This is a positive value. 534, 4616, and finally 262. Okay, if you sum everything up together, you will get your net present value of $971. It's a positive 971. Okay, I'm going to give you guys a few minutes. Okay, now I just want to ask you a question. Remember, I told you that when you make a decision using NPV, it can be 900, sorry, it can be a positive or a negative value. If it is a positive, what does it mean? It means that your benefit exceeds cost, so the project is beneficial to the company, so you would accept the project. If it is negative, that means the cost exceeds the benefit, hence you can accept the project because you would reject the project because it is not beneficial. So you can write this: accept the project as the NPV is positive 971, hence financially viable. Okay, guys, I just want to remind you, when you write, please write something like this. Your examiner will look for accept, he will look for this and this. He doesn't really look for the other keywords. I think the most important is this. Now, I just want to remind you, if at all you choose to write in a different manner, what is important is you state whether you accept or you reject the project. Okay. The reason why you do that is because when you state accept or reject, you will be able to tell the examiner that you understand the concept of decision making with the NPV. All right. Besides that, I also want you to remember that when you do this, please ensure that you calculate everything properly. Don't make any careless mistake, because then you're losing marks unnecessarily. And I will teach you how to use the Excel to do this, which is so much way faster than what we just did. And also at the same time, guys, you need to practice on your own, because when I do it with you, I am able to do it very fast because I've done the question multiple times. I've practiced the question multiple times prior to coming to you guys. But you are doing it for the first time. You are seeing the question for the first time. So you need to pay more attention. You need to practice more, and you need to ensure that you will be able to answer the question immediately after you receive it. Make sure you write sufficient notes, enough notes wherever you require to write the notes, and make sure that these notes will help you to score in your examination. So I will see you in the next video for tutorial of NPV. What I will do is I will do about 2 questions using the CBE platform to ensure that you are able to answer the questions, and I'm going to guide you closely to answer the question. Okay, so I'll see you guys in the next video.